Okay, there we go. We are now live on our various social media platforms. So thank you everyone for taking time out of your busy day to join us for today's session. Let me share my screen here. There we go. So today's session is on building your financial foundation. Specifically, we're going to be talking about budgeting for independent contractors. So for those of you who are not familiar with myself, my name is Andrew Wall. I am the managing partner here at CPA for IT, where our mission is to help entrepreneurs organize their finances, create wealth, and transform wealth into a legacy. So today's session is intended to be just a little bit of financial literacy, and talk about that first step of organizing your finances. And we wanted to talk about building a budget because, as we all know, the economic climate has made things tougher and tougher. Gas prices are getting higher and higher every day. And building a budget is becoming increasingly more important. And one of the biggest obstacles that we see as an accounting firm is firms that, and independent contractors that are new to being an independent contractor. They come from the full-time employment position where taxes are, taken at source. And at the end of the year, you might be getting a small refund. Now you've got a corporation, you've got to file tax returns. You need to prepare your revenue and expenses. You need to have money set aside to be able to pay GST, corporate tax, payroll tax. And these are all new. And it's really easy when you're getting paid every single month to spend without realizing that, there's a significant amount of taxes to pay at the end of the year. So budgeting is a really important tool to help you make sure that you've set a plan in action that is going to make sure that you have the funds available to meet the ongoing obligations, not only of your business, but of your personal budgeting as well. And we've developed a budgeting calculator. It's a glorified Excel spreadsheet that we've made available for our clients to help you with budgeting, not only for your business, but also for your personal budgeting so that you can have a holistic look at your entire financial situation. Because all too often, accountants will look at the income statement and the balance sheet of the corporation and not take into account what's going on the personal side. And obviously, a good holistic financial plan needs to take into account both the corporate as well as the personal aspects of your budget. So budgets are going to help to make sure that you've got the cash flow to fulfill those tax obligations that we've talked about before. It's going to help you with more accurate financial forecasts and insight, which can be really important for planning around what salary you're going to declare from the corporation, what contributions you're going to make to RRSPs, whether you're going to make any contributions to first-time home savings account, or any of the other tools that we have available to us to help us grow the net worth. It's also going to help us to delineate between the personal and business aspects of our business, which again are going to help us better understand what we're going to need to declare as far as a salary from your corporation. Because now that you're a business owner, the goal is to leave as much money in the corporation as we can because the corporation has a much more favorable tax rate. Up to first $550,000 of profit here in Ontario, you're going to pay only 12.2%, whereas the highest personal tax bracket is well over 50%. So that's a significant savings. But in order for that to work, we have to be able to leave money inside of the corporation in order to get that financial benefit. So by putting together a budget, we can put together a plan for what we want the year to look like as far as what we're going to spend on our various business expenses, what we're going to need to pull out of the corporation so that we can spend that on our personal expenses. And that way we can set a plan in motion that will guide us to not only making sure that we have money set aside for our taxes, but that we've got a plan built in to create wealth and transform that into a legacy. So that's the big reason for why we're putting this together. As I said, We've also run into situations where people who come from full-time employment to being an independent contractor are struggling with some of these concepts. And as you transition from being a full-time employee to being an independent contractor, it is imperative that you understand the whole picture and how this all interacts with each other. So first and foremost, we want to understand what are the things that we can claim as business-related expenses within our corporation. And some of those might be lifestyle expenses that you've had as a full-time employee, but were not able to deduct as a full-time employee. Think like your cell phone, your internet, your home office, potentially meals and entertainment that might be networking. So it's important to know what are the things that we can be able to deduct and put together a plan or a budget for what we think we're going to spend on those items, as well as the things that we would have that were maybe being non-lifestyle expenses that we need to spend money on for the sake of our business. Think accounting fees, if you think LinkedIn profiles, think all those things that you want to have in place to be able to run and operate your business. And then, of course, we want to take a look at the personal tax liability and how you can take control of that. And what we mean by take control of that is if you put together a plan and an agenda for what you're going to spend on these non-deductible expenses, that is going to have a big impact on your personal tax liability. Because as a business owner, anything that you take out of your business that we're not able to claim as a deductible business expense is going to have to be a form of remuneration. That could be a salary in the form of a T4. It could be a dividend in the form of a T5. It could be a loan to purchase a car, a loan to purchase a home, maybe a one-off loan for any non-explicit reason. But generally speaking, that's going to become remuneration in some way, shape, or form. And that remuneration is going to impact your personal tax liability. And if you can put together a plan for what you're going to spend on these non-deductible lifestyle expenses, that then is going to help you put together a plan for what you're going to need to set aside for your personal tax liability. And then again, obviously, the real goal is putting money aside to create wealth and transform that wealth into a legacy. So one of the other things that we do with all of our clients is a personal net worth assessment where we look at, we call it our pyramid of power, which is where are you now as far as like, what do you have as far as assets inside the corporation? What do you have in assets outside the corporation? What do you have as far as liabilities inside the corporation? What do you have as liabilities outside of the corporation? That gives us a snapshot for where you are today. Then the next step in that pyramid of power is to go to where we want to go. So how much money do you want to have in retirement? Usually we look at that as in the form of a monthly income. How much money do you need on a monthly basis to be able to maintain your lifestyle? And in order to know that number, you need to put together a budget. Even in its most rudimentary form, you need to know, what do you think I'm going to need for rent, for entertainment, for clothing, for all of the things that you're going to want to have in retirement, travel. What do you want to have set aside so that we know what the goal is that we're aiming for? Once we know where we are and we know where we're going, we can get to the final step of the pyramid, which is the path to get there. How much money do we want to set aside each year? How do we want to grow our assets? Do we want to grow them inside the corporation? Do we want to grow them outside of the corporation, et cetera, et cetera? Now, if you're looking for a quick, like, how do I get out of this webinar as quickly as possible? And you're looking for the short answer, which I get asked all the time, which is, how much money do I need to have set aside to pay my taxes and have maybe a little bit left over? And that's at least 30% of your gross income. Now, that's a blanket statement that, and I know everyone hates this, may not apply to you. You could be in a situation where you have a higher tax rate than that. Let's say you have substantially less in the way of deductible expenses, substantially more in the way of income. You might be looking at higher than 30%, but the average IT consultant, if they set aside 30% of their gross income, they're going to have enough money at the end of the year to pay their corporate taxes, to pay their GST, HST, to pay their payroll remittances for their personal taxes. So if you want to if you're just looking for a number to budget to pay your taxes, that's a good ballpark. But really, the point of putting together a more detailed budget is to get a little bit more granular. Are you closer to 25%? Are you closer to 35%? Um, a lot of that's going to be driven by, like I said, the personal tax liability, because that's the largest tax you're going to pay. And that's where a budget is going to help you figure out how much money you're going to need to set aside, not only to fulfill the corporate tax obligations, but to have money for, the roof on for those rainy days if you need to do a repair you weren't expected to do, to make sure that, like I said, you've covered not only your corporate tax, but your sales tax and your personal tax liabilities as well. And that you have a better understanding of which of the expenditures that you're budgeting over the course of the next year you'll be able to claim through the business, and which of those you won't be able to claim through the business and that are going to ultimately drive your personal tax liability. So again, quick, and this is not meant to be an exhaustive list. We have a more exhaustive list. We've got a separate webinar on what you can deduct inside your business. But things like home office, automobile expenses, meals and entertainment, advertising, telecommunication like cell phone and internet, travel expenses, seminars, education. This is not an exhaustive list. It's meant to be an introduction to the types of things that you can deduct. And there are three major criteria you need to be aware of to know whether you can claim it as a business expense. First and foremost is it specifically disallowed by the Income Tax Act? There are a few things in the Income Tax Act that are very black and white that we cannot claim. I'll give you the most common, which is the home telephone line. Now you can have a cell phone, you can have a secondary line, but your basic home telephone line is considered a necessity and not deductible. Golf green fees, specifically disallowed in the Income Tax Act. You can deduct the drinks that you're having and the food that you're having at the golf course, but you can't claim those. You also can't claim club membership. So if you belong to a golf club and we're looking at that as a way to get around the golf green fees, no. Club membership specifically disallowed. Country clubs, golf clubs, yacht clubs, those types of things are specifically disallowed. There are very few exceptions for things like gyms, if you are in the personal health space. But again, generally speaking, even gyms are going to be specifically disallowed. And then lastly, life insurance. Life insurance is specifically disallowed. There is still reason to get life insurance and to get it under the corporation's name as opposed to getting it personally. Because even though it's specifically disallowed, it's what we call an add back. So you put it in and we put it as an expense on the income statement, but it gets added back on the T2. And what effectively this means is that you've now paid for that with money that's been taxed at the corporate tax rate at about 12.2%, as opposed to having to take the money out into income, pay your personal tax rate, which I said can go over 50%, and then pay for the insurance. So if you're looking at insurance, talk to your account manager, but generally speaking, if you're getting life insurance, put that under the corporation's name. And again, not a deductible expense, but it will be on the income statement and added back. So there's a lot of things that you can claim and put together in this budget. But the question is ultimately, how are you going to put together a budget? And I mean, starting at the basics, gather your financial information, bank statements, bills, tax returns. You want to categorize the income. Is it, active income, business, passive income? The reason we differentiate between the two is there is different tax rates. You want to categorize your expenses. Do we have fixed expenses, variable expenses? Do we have expenses that are business-related expenses, non-business related expenses? And then once we understand the history, we want to forecast into the future based on the history. Do I think I'm going to spend more on travel next year or less on travel? Is my cell phone bill going to be going up? Is my fuel and my automobile expenses going to be going up over the next year? And we can put together a plan. And then based on that plan, we want to track that plan that we put together against the actual expenses that we have spent. So not only do you create a budget at the beginning of the year, but you circle back to that budget at the end of the year to see how did you fare? Were you on track with your budget? Did you spend far more than you expected on fuel? Did you spend less on travel than you were expecting? And how is that going to then alter the budget for the next year, so that you can get more accurate? Because you'll never be 100%, you'll never stick to a budget 100%. I mean, if you can, you've got more, um, you've got a better crystal ball than I do, and you've got more self-control than I do. Um, but the budget is meant to be a plan. It doesn't mean you're going to be exact to that plan, but it's going to help guide you and guide your decision making. Because if you're checking in on this throughout the year, you might realize, 6 months in that, you spent far more on fuel than you were budgeting. So you're going to need to, if you want to stay on budget, spend less in other things like going out and going out for meals and entertainment. And some of that discretionary spending can be adjusted throughout the year to accommodate that budget. And like I said, we have put together a spreadsheet, so I would be remiss if I didn't share with you what that spreadsheet looks like, and provide that to you so that you can have a look at that and begin completing the budget. Now, this budget can be prepared on an annual basis, has been done in this example, or on a monthly basis. So you can do this on a month-to-month basis, or you can do it on an annual basis. I would be thrilled if you just did it on an annual basis, because that's better than what the average person is doing out there. But in an ideal world, the budget is more on a monthly basis. And this tool will give you a nice visual to see how you're doing it as far as your revenue versus your expenses, your estimated versus your actual. And what you can even do is go in here and drill down, not on the total, but on the personal related expenses, where you can break things down into housing, entertainment, transportation, loans, insurance, taxes, food, savings or investment, gifts, pets, personal care, legal. And you'll get a nice little analysis on here as far as what is the projected cost and your actual. So you can put in the projected versus the actual, and it will show you the variance for you. So as we modify each of these, like if I actually spend 800, we can see the variance being updated in real time and adjust for that. And so we can see how we're tracking, and we can do that not only for the personal non-deductible expenses, but we can tie that into the business's operating expenses and the business's income as well to get a holistic feel. And I think one thing that's unique about this budgeting tool is that it does encompass both the corporate operating expenses as well as the personal non-deductible expenses. I haven't seen that anywhere else, which is why we have developed this for our clients. Because as a business owner, this is all intertwined, and that you're going to be spending money on things, like I said, like your telephone and internet, which some people might consider personal, but is going to be a deductible business expense for yourselves. You're going to have things in there like travel and home office and those types of things that are going to be, at least a portion of them, deductible. And that is going to have an impact on your taxes, because if they're deductible business expenses, you're not going to pay any tax on any of that. And that's one of the big advantages that you have of being an independent contractor, is the ability to reduce your taxable income by deducting business expenses. And your goal and your objective is, whenever and wherever possible, we want to be shifting things from this worksheet over to this worksheet, because if we can deduct them as business expenses, like I said, you won't pay $1 in personal taxes or even corporate taxes. If they're on this worksheet, that means that in order to fund this budget over here, we're going to need to take that money out of your corporation as either a salary or a dividend. And that helps us figure out, okay, I know I'm going to need, in this case, a budget of about $100,000. And I can then go in and be like, okay, what's the tax liability on $100,000? If we know operating expenses are, in this case, 30,000, and the income is 200. Well, I've got 200 minus the 100 for personal expenses, minus the 30. I'm left with $70,000, so we can budget for the corporate tax liability, and we can get a feel for all of this, so that we're prepared to make sure not only do we have money set aside for taxes, but we've got money set aside for savings, and that would then, like I said, work intertwined with our pyramid of power to be like, well, I'm setting aside 20,000, but based on the pyramid of power, I need to be setting aside 30, or I need to be setting aside 40. And if I'm way off on my budget, I need to go back and either reevaluate my pyramid of power to set more conservative goals for retirement. I need to reevaluate my pyramid of power to set a better rate of return, or I need to readjust my budget to spend less so that I can achieve that financial freedom goal in that perspective. And by having this information at our fingertips, it allows us to make those pivots and those changes throughout the year. And also what I find for people who do these budgets for the very first time, it helps you to better understand really where the money is going. And there are some great tools out there that I want to introduce you to, not only this calculator, which is helpful, but there's some new technology that can make completing this easier than ever. So there's a couple of tools out there that do this, but one of my favorites is from our good friends at Intuit, which is Mint. And Mint allows you to connect your personal banking and think like QBO for your personal side of your business. So this can track your monthly spending and get those numbers that you might need to put into this worksheet quickly and easily without you having to go line by line through your bank statements and see, what did I actually spend on travel? What did I actually spend on housing? What did I actually spend on meals and entertainment? What did I actually spend on my children's education? What did I actually spend on my children's daycare? And you can get all of that at your fingertips quickly and easily in ways that historically would have taken hours, but now can be done automatically, so that each month you log in and have a look at your Mint to do your budgeting from there. And quite frankly, whether you use our spreadsheet, whether you use Mint, whether you use another spreadsheet, it doesn't really matter. But what I can tell you is that statistically, people who put together budgets are far more likely to have a successful and lucrative retirement, as well as to be more successful and to not run into issues as far as filing their taxes on time, or having tax liabilities that they can't afford to pay. So the more financially literate you are, and the more proactive you are with your financial budgeting and planning, there is a direct correlation to the rewards you will reap in retirement, to the planning that you do up front. So we wanted to just sit down, make those tools available, answer any questions that you might have around budgeting. And I know that we've got a couple of you live here in the Zoom session. We've got even more of you watching on YouTube and LinkedIn and Facebook. I want to give you guys an opportunity to ask any questions that you have around budgeting, or around the tools that we've prepared, and or ask any questions related to anything that we can help you with. And other than that, I think we are pretty much. Oh, I just realized I was sharing my screen without showing you guys Mint. My apologies for that. Here is Mint. It's mint.intuit.com. You can track your monthly spending. Like I said, you just sign up for the product, log into your various credit cards and bank statements. It works, like I said, in the same way as QBO is, which means it will fetch every single month until the bank feed breaks, which will inevitably break. So you want to go in there, on a regular basis. Ideally, like I said, monthly, could be quarterly, just to make sure that your bank feed is still there and to have a look at, how are you actually spending? Because the big part of the budget, and again, I'm realizing, yeah, this this worksheet I thought I was showing you, I had on a different screen. So there's the personal expenses with the various categories. There's your operating expenses. There's your income, and there's your budget summary that shows you how you compare. Let me get this guy screen. How you compare it from the estimate to the actual for both income and expenses, what your top five categories are. And then again, we've got that broken down for your estimated versus actual for income. And you can add in new line items if you don't like the way we've broken these down. These can be modified, but we've just done this to just tie into our existing chart of accounts. So with that, I want to thank everyone for taking time out of your busy day to join us for today's session. Again, would love to hear feedback from you guys as far as whether you're finding these sessions helpful, what you'd like to see as far as upcoming content. We do have new content coming up every single month. As you know, we've got another webinar next month, which is going to be, oh, why is it Kasim and Iman? Why is it not? Why is our June webinar not on our website? That's not good. I will get you updated. We don't have any more webinars on the website, so hopefully we'll get that sorted. I do see a question coming in. Where can we find the handy spreadsheets? I will make sure it's sent to everyone that is attended this session live. Our next webinar is going to be AI and automation in accounting, how smart tech saves time and money, which is going to be a really good one. So thanks for that. And let me see where this is on our website. Like I said, we'll get this mailed out to everyone. Let me just see if I can find it on our website. I believe it should be in here. No. So two things. I will make sure that it gets linked on our under tips and tools. So I'll ask Kasim from my team to update that. So Iman, can you work with your brother to make sure that gets added into our tips and tools, which it does not appear to be there right now. We will get it added there, and it will be, and also have Rachel email it to all the attendees so that you all have a copy of it. So thank you, Julie, for pointing that out, and we will make sure it is available to everyone, not only via email, but available on the website as well. Awesome. Doesn't look like there's any other Q&As. So thank you, everyone, again, for your time. And we'll see you in 2 weeks on our session on AI and automation. Have a good one, and bye for now.